You've probably never met an accountant like this.
What's the weirdest thing that you can actually legally claim as an expense on tax?
So we've got clients that are in OnlyFans. So what the OF creator claims, they're called sexters. They pay people to message their subscribers. Cosmetic surgery is like a pretty common one. We're talking like veneers, we're talking implants, we're talking anything. We had a client try to claim their dog and they said it was a guard dog because they had stock at home.
Meet Julian Mauro, a Melbourne-based accountant who works with some of Australia's most followed names.
Just a massive shout out to you, Julian.
I found Julian from Mauro.
I literally have the best accountant ever.
You hear a lot of stuff on the news and they talk a lot about the supply of homes. Where there's opportunity though is for first home buyers. There's obviously still some government schemes and things like that out there.
Is there any drawback to just saying, okay, let's just make it easier for people to get in the housing market?
I mean, it makes sense to the normal person and the younger demographic, like I said at the start, because they really don't understand anything. Invest in education, it sounds obvious, but people aren't out there doing it.
Most common asked questions by clients under 30.
Commonly asked is hard, but industry,
Yeah.
tax. So I did a seminar recently. It's like what they didn't teach you at school and literally everything to do with tax. So people are constantly like, why don't I get a refund? Why do I have tax to pay? Why isn't my refund bigger? What's Medicare levy? So literally like anything to do with a tax return, so commonly asked. People just don't understand even what it is or why they're getting money back, why they have money to pay. So it's really just the most simplest terms around taxes.
Tax. All right. On that, another rapid fire. What's the weirdest thing that you can actually legally claim as an expense on tax?
Weird's an interesting word, isn't it? So, for example, I mean, interesting. So we've got clients that are in OnlyFans creators.
Okay.
And then we've also got like, say, architects. So what the OF creator claims, you know, let's just say they're called sexters. Right. And in reality, what that is they pay people to message their subscribers.
Okay.
So when you've got, you know, a creator that's got millions of subscribers, they're probably not sitting there themselves replying to millions of people.
Got you.
They pay the sexters to do that. So it's really just like paying a contractor, which is a normal expense that's linked to your business. It sounds, you know, potentially weird to said architect, but it's a normal expense for a creator. So take that one.
So sexters.
Got you. What do you put that down as though? It's just a
It's contractor.
service.
Yeah. It's just
Effectively
a contractor.
Yeah, right.
I don't usually write the word sexter. I might just ring alarm bells for no reason.
Yeah, of course. Yeah.
But internally, that's what it
Sexter.
is, mate. Yeah.
All right. I got one more weird one. Okay. So that's, you can actually claim those things on tax. What's something really weird that you see like clients try to claim on tax that you can't?
We get a lot of questions around what people can claim.
Okay.
I feel like they honestly just try and claim anything in their lives. Cosmetic surgery is like a pretty common one. Like it's not that shocking, but still people think they can claim it. We're talking like veneers, we're talking implants, we're talking anything, right? We had a client try to claim their dog and they said it was a guard dog because they had stock at home.
Wow.
So I'm on an e-commerce, I've got stock, I've got a dog. Can I claim the dog?
Yeah.
Awesome.
So
That's
yeah,
funny,
it was
eh?
kind of like
Security.
Yeah, security
Yeah,
dog
yeah.
with no training. And, and the
That's
sort.
quite funny though, because I actually think I emailed you once.
Was that you?
No. Not a guy, but it was relevant to a dog. I was like, is this possible? Like, if he's in my content, does that classify as like?
Oh, yeah, you did ask me.
And I was
that.
like, I might as well just ask because if it is,
I
then,
feel like other people have asked me that as well.
Yeah.
There's a bit of a misconception. Not a misconception, but like people get confused with what's in your content versus what's required to be in your content.
True, yeah.
So I can have like my whole family in the content, my pets and all that, and be like, they were there, but were they required to be there? Probably not.
Yeah, okay.
You know what I mean? Are they boosting my income? Hard to say.
Got ya.
So yeah, it wasn't
It's
Fraser.
worth a try though.
No.
It's always worth a try.
It's interesting for us as a team at work, like people will just shout out, they're like, oh, so-and-so asked, like, can they claim this? So, you know, it's a bit of a teaching exercise for everyone, but yeah, generally, probably can't do those things.
What about travels and stuff as creators when you're flying around?
Yeah.
So is all that claimed on tax?
Yes and no, right? Obviously, if it's 100% work-related, 100%, you know, you got to keep your records, do all your fancy stuff. But once again, where people get confused is the personal portion of the trip versus work-related. So what happens sometimes is you'll, you know, go interstate overseas on some creator trip and you work for a week. But then you're like, hey, I'm in Europe. I'm going to stay for 3 weeks. Then in reality, you can only claim 1 out of 4 weeks. So you can only claim 25% of the flight, not 100%. So they're the things that you got to kind of look at, apportioning personal versus work. But creators do get a lot of good exposure, which means good expenses because they're doing crazy stuff.
Got ya. Is such a like a blurred line, this kind of new industries that are popping up?
Yeah,
How have
100%.
you found yourself navigating it?
I mean, because we've been doing it for so long, it does give us, I suppose, the head start on it to see what people are doing. And the HO isn't always, I suppose, up to date with these industries. So, for example, there's still not an occupation code in the HO that says influencer.
Really, right?
It's such a common thing. Creator doesn't
Yeah.
exist.
Yeah.
We use the word performing artist. That's the closest
Right.
thing to any of these industries. And going back to kind of what they can claim, the rules are still the same in terms of expenses need to be linked to what you do. You need to have records, blah, blah, blah. It just gets grey, like you said, in terms of, is that actually relevant? Do you actually need to pay for it? And do we apportion it? So as long as we're conservative and we do all the, background work, there's things to be claimed.
Got you.
It's an interesting space, that's for sure.
Oh, yeah.
Yeah.
And is that kind of mostly your clientele currently, or?
No.
more
It
spread?
seems like it does sometimes
Right.
because social media and like if anyone's going to promote us, it's obviously our, highly engaged creators and things like that. But we got clients naturally, like I said, the architects, the OF creators, we've got the gym owners, cafe owners. So literally there's everyone and anyone. The influencers are just your louder clients. But as an accounting firm, I'd say we have a large proportion of influencers versus the norm. We started building that kind of probably when I met you guys 5-6 years ago, and then naturally word of mouth grew. So we built up that talent base pretty quick.
What do you reckon made them kind of gravitate towards being clients
Ourselves?
of yours as opposed to someone else?
The common thing that they were saying to us was we're talking to these old accountants and they literally don't understand our industry, which as simple as it sounds, because why doesn't everyone understand it? They were like, how do you get paid through Instagram? What do you mean you're an influencer? So one, it was just understanding what they did, and that was through our knowledge and probably our age. And then our kind of ethos as a business is, there's no judgment. It's comfortable conversations. It's not using heaps of jargon, and that kind of related to that younger demographic where they were scared of taxes. They had no idea what they were doing. They came to us and we kind of said, it's all good. Don't stress. Like we see it all the time. So I think that kind of built the trust, and then naturally the word of mouth stuff. Hey, don't have an accountant that deals with influencers. Have you ever heard of someone? And because there wasn't many, it kind of happened naturally that way.
Got you. Yeah.
So a bit of right place, right time, but also it kind of aligned with how we operated and how we still operate in terms of language and, how we deal with clients.
So you kind of fell into it somewhat.
Yeah.
Yeah. Just on the pathway, realized that is a
Correct.
place where it needs.
Yeah, it was a
bit more
demographic
help.
that
Yeah.
needed the support. We were of the age, it was growing. So it was kind of like everything just fell into place. And obviously we capitalized on it. We got those, influencers to promote it to their friends if they were happy with our services, which was something that was great for our business. It wasn't something that was necessarily paid. Obviously, a lot of people are doing paid promotions now, but that was genuinely, we like your service. We're happy to, put it out to our community and grow from that.
Got you. Yeah.
Yeah.
And you've transitioned like more helping people with mortgages and purchasing homes.
Yeah. So
Where'd that idea come about?
So originally we're just accountants, and probably halfway into the business, I had a lot of my younger clients wanting to buy property, which is awesome. It's a natural progression of, what you do once you're making money. And they were going to these other mortgage brokers, and there were so many things as the accountant that we needed to supply. They're like, hey, can you give my mortgage broker my tax returns, my ATO, write this letter, do all this stuff. And I was like, wow, there's a lot of stuff involved. They don't even know the broker, and I've got to really fill them in on it. So I was like, hey, I've got the relationship with these guys. I know their finances. Why don't I go off and do the course, do the study? Because once again, the opportunity was there. The same way like with the influencers, I saw the opportunity with mortgage broking. So did the courses and then naturally have been able to, kind of cross-promote that to my current client base and be like, hey guys, we don't just need to help you with tax and business and all that. We can actually help you as you progress and, tap into the housing and the mortgage broking, which is really fulfilling as well instead of just kind of compliance work all day long.
In terms of the people, because it's relatively difficult for a young person now to kind of break into the housing market.
Yeah.
What's your current thoughts on that whole situation,
Yeah.
being that you're kind of involved
Yeah.
in it and you can say it up front?
Yeah. I would say I feel like at the moment it's not the hardest time, but it's also not the easiest,
Got you.
right? So obviously what I mean by that is you hear a lot of stuff on the news and they talk a lot about the supply of homes. So they say because there's not a big supply and we're not building lots of them, that therefore there's, high prices and all these things. Where there's opportunity though is for first home buyers, there's obviously still some government schemes and things like that out there. So, a 5% deposit instead of a 10, 20% deposit. Removing things like income thresholds. So at the moment, to be eligible for some of these concessions, you need to either earn 125,000 or less as an individual or 200 grand as a couple, which is quite a decent income. But from next year, they're actually scrapping that altogether.
Right.
So someone on a higher income will be able to access that same concession.
As in this financial year?
No, as in like 2026.
Okay.
Yeah. So currently it's still based on the income thresholds. And a few people probably might say, oh, they make such a high income, why do they need that? We see it all the time. You might have that high income, but to save the deposit is the hard part, right? So people come to us and they've got a great income, but when you're buying $1 million home, you got to pay 60 grand of stamp duty, you got to pay $200,000 of deposit. It's not that easy when you've got rent and bills and all the other stuff, regardless of what you kind of earn sometimes.
What is the lowest income that you need to have, you reckon, practically in our current housing market in Melbourne?
Yep.
That you've seen can take out a loan, buy a house. So I'm asking this from perspective. When I was in my younger 20s, I go, do I even make enough to buy a house? But obviously houses back then were like 300,000.
Correct.
Now they're more now. So if somebody's wondering and they're too shy to call up a broker and ask, can I afford this?
Can I even get into the market?
What do I need to be making on a yearly salary that makes me go, okay, maybe even if it's a cheap house that I can get into, what income?
Yeah. One thing to consider as well is if you're buying as a couple, and obviously that's a luxury to some extent, but obviously 2 incomes is better than 1.
Okay,
right?
Yeah.
So on an income of say 50 grand, you might be like, hey, I've got this roll, 50 grand, I've got my deposit there. You can probably only borrow, $250,000 or so, right? Depending on your interest rates and things like that. So that's probably not going to get you into the market.
That's a single.
Oh, that's a single on your own. And the reason why sometimes people get not confused, but you go online, type in home loan repayments, right? And you say, based on this loan, I can afford that, which maybe you can. But when the bank tests your borrowing power, they actually add 3%-ish on top of the current interest rate. So if the interest rate's 6%, they want to see that you can afford it at 9%. It's like a stress test.
Okay.
So you see the real life interest rate and say, hey, I can afford that. But the bank wants to make sure you can afford it plus some, right? Because it's a risk thing. Versus say an income of about 100 grand as a single, then you could probably borrow somewhere between, 550, 600,000.
Which is sufficient.
Which is sufficient. I would say an average loan for first home buyers is like 550.
Plus your deposit on top, which is you can get something. But if you're
correct,
I'm guessing most people buying houses are probably as a couple.
Yep.
So what is if you go by couples?
Yep.
And I want to get in the housing market. I don't know. What are the cheaper houses these days? Smaller ones you can get 400, 450, still 500,000.
Whereabouts?
Somewhere in Melbourne.
Like a unit.
I mean, you're looking.
Well, no, at the end of the day, if a single can borrow that 550 to 600, as a couple, if they're earning that together, give or take, you know what I mean? Because obviously living expenses are a bit higher when you're a couple and things like that. That would still be sufficient. So all of a sudden, that 50,000 as a single, what can a $250,000 loan get me?
Right.
When there's 2 of you earning that money together, it brings a few options to the table. Right. Obviously, you need to consider things like, do you have a HECS or no HECS? Right. So these numbers are say someone that doesn't have a HECS.
How does that impact it? Is it treated the same as a regular loan?
It's essentially like, let's say you earn, let's use 100 grand, it's a nice round number. Instead of the bank assessing you on 100 grand, if your HECS repayment was say 5 grand, then your income for servicing is only 95 grand.
Okay. Got you.
You know what I mean?
Yep.
So it just reduces your overall income because that money gets deducted from your pay through tax.
Okay.
Right?
Yep.
Things like credit cards are a bit different. So where people get confused with credit cards is you might have a $10,000 limit on a credit card, right? The first thing is, even if your credit card's fully paid off, the balance is 0, the bank includes the 10 grand as a liability, right? Because you can access that 10 grand at any stage.
Got you.
That $10,000 credit card doesn't reduce your borrowing power by only 10 grand. It probably reduces your borrowing power by 30, 40 grand.
What's that?
Because it's that risk thing and that stress test.
Got you.
Right? It's not just dollar for dollar. So that's why, once again, you don't know what you don't know. So first home buyer will come to us or they'll do their own calculations and get said number. But if you do that strategy work or that planning and you're like, hey, do we even use this credit card? Can we close it? Or can we reduce the balance, the limit from say 10K down to $1,000? That's going to significantly adjust your borrowing power as well.
Is that rough 3% that they put on? Let's just say interest rate is 6%.
Yep.
They'll probably use 9% as the buffer, right?
Yep.
And is that including the living expenses and everything else, or is the living expenses is on top of that?
No, your living expenses, they do living expenses in an interesting way. So you obviously submit what your living expenses are, and then they have a term out there called HEM, which is pretty much based on your income. They work out what the average living expenses are. So you then submit your living expenses. If your living expenses are below the average, they take the average. If your living expenses are above the average, then they take your actuals.
Wow.
So they don't, in answer to the question, they don't add a percentage to the living expenses. It's based on actual or average based on your income. It's more so the actual loan repayments that you're applying for. That's the one that they stress test you for.
Well, I don't know if this is the same in America, but you know how in America people say that they're so big on buying properties and positively gearing it and stuff, but it's so hard to do it here.
Yeah.
Because you've got that 3% buffer that they do, but you also have that HEM that you've got to meet as well.
Correct.
On top of this, it's two things.
Yeah.
So when you can service a loan, you can really service a loan.
Yeah.
They won't just give loans out to anyone now.
And the issue, some people won't call it an issue, but let's say you're earning lots of money. Let's say you're earning $500,000 a year. All of a sudden your HEM is huge because they're like, hey, you earn $500,000 a year. Your living expenses are X. You could be a great saver, not like live at home, actually not have big expenses, but they'll still take the HEM.
Right.
So that HEM is not just like a flat number. It's based on your income, based on a lot of stuff.
Correct. Yeah. And each bank will assess it slightly differently, but that's why they won't always take the actual. If your actual is lower than the HEM, they'll generally take the HEM. Here and there, they might say, hey, and they'll also ask for a clarification why your expense is below HEM because they think it's kind of a bit sus.
It's sus. Yeah. What do you?
Why
what
is
are
it
you up to?
lower? And there's generally reasons to explain it. I live at home. I don't have any costs, whatever. I run an online business. I don't have a car. I catch the bus.
Can you give an idea of what that HEM is, like per week or per month, but like by a single or couple, just
I can't.
you can't. You actually can't. You actually can't do it.
Oh, by law.
Nah.
By law, you can't? Or is it?
No, by law. I just actually know.
Yeah, right.
I don't actually have the numbers.
I thought we asked a legal question. Okay.
No. No, that is hard to. Because how do the banks do it?
Because each bank is also different. So
they
one
run
each
it,
bank,
right.
in terms of that 2.5%, 3%, they all have different risk appetites. So when you're getting your borrowing power and your pre-approvals, that's why sometimes as brokers we do calculations with multiple banks because you can get a higher borrowing power with one bank versus the other. So they might add 3%. This guy might add 2.5%. You know what I mean? So there are variations between them.
So serviceability is different. Bank
Correct.
to banks.
Yeah. So some banks that might be renowned for being like tough on servicing, but they've got really good interest rates. So if you're comfortable with your servicing, you've got the buffer in there, like these guys are great.
Right.
Over here, you might be like interest rates a little bit higher, but I know I can get the loan that I need. So once again, this is kind of like where a broker comes into play because when you go to your bank, they're like, hey, this is your borrowing power here. These are our interest rates. They don't tell you about all the other guys and what they're doing.
Got ya.
Whereas a broker, whether we use A, B, or C, we don't really care. It's whatever suits the customer best. Yeah.
Right. For the people listening to this that are, whether they're young and they want to plan ahead in the future to be able to buy a home.
Yep.
Or they're like really close. They're like in a year time or 6 months time, they want to just like jump in and start sorting that out. What are your tips for them to make
True
sure
advice.
that they can?
I suppose cleaning up things. So the credit card's an obvious one, but things like even Afterpay, right? Younger demographic, we're constantly using all these platforms. So they have an effect on your borrowing power as well, right? So if you can close them down and not have them on your bank statements, it's one less question for the bank, right, to prove your borrowing power. Obviously, in terms of expenses, sometimes people freak out and they're like, hey, I'm going on a holiday or I've got a wedding coming up and I've got these big expenses. That's not a concern, like, because it's explainable. But if you've got things that are, I suppose, excessive in nature, it's kind of tidying up all of that. Building the deposit, showing the savings history. So depending on the bank, sometimes they like to see what's called genuine savings, which is a 90-day period where your savings is essentially a percentage of the property. So let's say you need to show a 5% savings, but you need to have held that savings for 3 months or more.
Mm.
Right. So once again, it's just like having everything ready like that. If you're a business owner, so this could be a sole trader versus being a salaried employee, there's probably a little bit more planning to do. So when you're self-employed, the banks look at your tax returns generally to work out your income because your income changes week to week, right? So the most recently lodged year or an average of the last two is, once again, depending on which bank you go to. So if you're kind of like, hey, in 1 year's time, I'm going to be applying for a loan, well, then the current tax return that you're about to do, that might be the one that they're going to assess. So as an accountant and a broker, they kind of work against each other. So as an accountant, we're trying to reduce your profit because that saves you on tax. As a broker, you want to increase your profit because you want to increase your borrowing power.
Right, yeah.
So it could be things like, hey, I was going to invest heavily into ads this last month of the year to grow the business, but that's going to reduce my profit. So do I delay that expense until next financial year, which thus improves my profit, thus improves my borrowing power? So I suppose it's just like probably the basic thing is, aligning yourself with the broker, with the advisor, so you can start to just chat around all those different things because everyone's scenario is different. But in essence, it's cleaning up your bank accounts, getting your structure right, your savings, and maximizing your borrowing power, whether it's through income or whether it's through closing debt.
Got you.
So as sole traders, if they've operated for a year, that's enough.
No. So the year thing is in terms of how the bank assesses you.
Right.
So when the bank looks at your borrowing power, some banks will look at the most recently lodged year, whereas other banks will look at the last 2 years and take an average of your income. So it's not a minimum time. The minimum time is depending on the bank. So some banks won't assess a self-employed person unless they've had an ABN for 2 years or more. Some banks, 18 months. And then some banks, which generally isn't any of the major banks, it's 12 months minimum ABN. Right. So 2 years is kind of like you've got all your lenders on board to look at. But then when it comes to who's going to give me the most money, once again, that's when you start to look at, do I go with a bank that looks at an average? So let's just say we put some numbers on it. You earned 100 grand and you earned 50 grand. The average guy is going to take 75 in the middle. But if you go to the bank that looks at your most recent, they'll take the 100 grand as your profit. So that's obviously going to get you a better borrowing power.
And as an employee wise,
employee is a lot
full-time,
cleaner.
casual, doesn't matter.
Well, full-time is obviously easy because that's your set salary, your past probation, they know what your income is. Part-time and casual, generally you just need to have it for a certain amount of time. You need to show consistency. They look at your year-to-date numbers to kind of sense check.
Roughly how long do you know, like the time frame?
For
like a casual part-time?
Say like 3 months to 6 months.
Okay.
Yeah. A lot of banks don't do if you're on probation, but there are some banks that still work with pay-as-you-go salary employees on probation. So once again, it's not hard, but there's just so many factors, which is why it's interesting, I suppose, for us, because when someone comes to you, it's not just like, hey, I'm buying a house and you're like, oh, here's another home buyer. It's really a bit of an interesting situation to work through the steps.
There's a couple. There's a thing, so if I'm an employee and I can hold a job at one place for 6 months, that should be enough for the bank to say this is legitimate. And if I was a business owner on a sole trader, I'd need about 1 to 2 years.
Correct. Yeah.
Something good to aim for.
Yeah. If you do this at a high level. Yeah. And if for example, in your business, your first year was kind of slow, but based on how you're tracking, your income's doubled. It's like, hey, do I wait it out until June when I do my next tax return when my income is going to be so much higher because that's going to get me into a property versus settling for that cheaper property just because you can't wait the 6 months. So once again, it's like it's hard to juggle it all, but these are the questions you ask yourself.
Got you. Yeah. So a big complaint that comes up from like young people, at least from what I've seen, is like if they're renters and they can afford the rent and the rent is usually around about the same amount as a monthly payment would be for a home loan.
Yep.
Is there any drawback to just saying, okay, let's just make it easier for people to get in the housing market because they can already prove somewhat for the past few years or whatever that they can pay off a certain amount per week or per month?
Yeah. In terms of like, should the bank almost be more lenient if you can show that you can rent? I mean, it makes sense to the normal person. Like you and I agree with that. Like if you can show that you've been able to pay it, you've got, you tick the boxes from your salary or your business, yes. But banks really are very risk driven. Do you know what I mean? Hence why they have these buffers in there.
Got you.
And you appreciate it to some extent because, you know, you hear about housing crisis overseas, probably America, where they had, you know, all those interest rate issues and no one could afford their mortgages. So maybe it's like, is there a happy median? Are they too tight? You know, is 3% too much? Is the whole testing of your living expenses too much? Can we rein them in somewhere and make it easier? A lot of the current concessions and help to first home buyers is really just like with the deposit because they understand that that's the hard part of getting into the market. So there could be a piece around like, proving your income potentially. And the hard part is when you're renting is you can't usually say, generally speaking, you can't usually save for a deposit because so much of your money is going to rent.
Exactly.
It's a bit of a catch-22.
Yeah, true.
Yeah.
And the deposit is still the standard. Is it still 10 to 20% that people try to aim for? You said that you can do 5 now.
You can do 5 if you're part of the, like if you tick the eligibility boxes for the first home deposit scheme. 20% is the mark where you don't have to pay what's called lender's mortgage insurance. So pretty much if you have less than a 20% deposit, once again, the bank deems you as a riskier customer. So they charge you an insurance that protects the bank. And they also charge you a higher interest rate. So 10 to 20 can definitely get you there. You just have that higher rate and the insurance added on top.
20 is the goal, pretty much.
20 is the goal. Again, subject to if you can't get the first home deposit scheme. Then you've got all other complexities in there. Do you have the option of a family guarantor, right? Which is obviously a great position, a lucky position for a lot of people to be in. So that can help reduce the deposit you need to put in because your mum or dad might say, hey, you can use our house as security. So as long as you can afford the loan, that's deemed fine in the bank's eyes and that's less risk to the bank.
Obviously, you can't save much when you're renting.
Yep.
And when they're assessing your living expenses to buy a house, surely the bank will not count rent as a part of it because when you buy, you want to have that expense.
Yeah, that would be mean. No, that part's right. So they discount the rent.
That'd be ridiculous otherwise.
Yeah. If you're buying an owner-occupied, they pretty much say, well, you're not going to have that expense ongoing. So that's out. If you were to buy an investment property, obviously they do include it because you're going to continue to pay your rent where you live. So that's,
With that, you comment, so find an accountant. So I know a lot of employees, like my staff members, under 30, probably under 25, they've never used an accountant before. And when they lodge taxes, I mean, in my early 20s, until I started a business, it's just, I don't know how. Just go on, lodge your own tax,
tick the boxes.
fill a form out. So I think they just do their own thing.
Would this include your PTs, your sole traders? Do a lot of them still do a bit of a mix?
Honestly, some of them probably, a lot of them try to do their own. So I always saw back then when you started to make, anything close to a full-time income, it might be worthwhile for me paying an accountant. I don't know what the going rate is these days, but
a basic tax return could be, $200 to $300.
So the way I see it is you guys as accountant, what people don't understand is you can claim it on the travels and stuff, even as a regular employee, right? But they don't have access to the threshold that you guys would have as an accountant. So you can actually help them save more money. That $200 they pay you.
If you reduce their tax by more than the $200, they're essentially ahead.
Right.
Is what you're trying to say.
So do you see that as a regular employee was making a full-time income, not even a 6-figure income, but regular full-time income? Do you see that as worthwhile on the return of that $200 that come to an accountant instead of doing it themselves?
From a tax perspective, yes, because one, you don't know what you don't know. So they might think this is very simple. The tax has already been withheld. I'm just going to tick the boxes. But it's little things like, how do I claim working from home, right? A lot of people work from home, part-time, full-time these days. Travel between offices, equipment, all that type of stuff. So if you don't know about it, you're going to miss it. But then separately to the tax, the tax savings itself, it's even like I was saying at the start, understanding your tax. Sometimes generalization, but when you're young, you tick the box, you get your $1,000 refund and you're wrapped. But as you get a bit older, you want to start to actually understand what's going into your tax return. So it could be something like the Medicare levy and the health insurance. If you lodge it yourself, you might pay this what's called Medicare levy surcharge, right? So once you earn over a certain threshold, if you don't have the basic level of hospital cover, the ATO charges you this extra surcharge. You'll just accept that because you're none the wiser. Our job as an accountant would be like, hey, just flagging, if you were to get the health insurance, you won't pay this surcharge. And the cost of the insurance is probably cheaper than the extra tax. So it's not just tax minimization, it's also just understanding what's going on in there. And then you never know, one day you might get a bigger income, you might start a business, you might get an investment property, and then you've got the relationship with someone then already.
That's interesting. So if you make a certain level of income, your health insurance, this is private health insurance, would actually be free.
Well,
if you made
an interesting word.
If you made a certain level of income.
It's kind of like pay the ATO an extra $1,000 in tax or give that $1,000 to the health insurer.
Yeah.
And at least the way I pitch it is you're getting something for your $1,000 with the health insurance. Yeah. Even if it's a low level of hospital cover, it's still something versus giving $1,000 to the ATO other than the roads and stuff. It doesn't actually get you a direct benefit.
That's great advice.
Yeah, 100%. Why do they put that in there? Is that just?
I think it's to ease the cost on the government to some extent, because obviously we all fund Medicare. So Medicare, which is one of the common questions we get as well, is what is Medicare? Why am I paying it? So other than super low income earners, 2% of your income goes to Medicare, whether you earn $100,000 or earn $1 million in your personal tax return, right? So the surcharge is there essentially to, I would say, ease the burden and be like, hey, get health insurance so the government just doesn't have to keep funding this ourselves.
Got you. Yeah. So it's about the public health system versus private.
101.
Yeah, interesting. Take me back then. So as someone who's kind of gone through this whole thing and you've ended up where you are now, giving phenomenal advice.
Rate it.
Right. You enter into a big firm at some stage.
Yes.
At what point you decide to leave and start your own business? What was that situation like? Like how long did you consider
doing
the jump? Yeah.
Yeah. I think I'd been working in the industry maybe like 7 or 8 years, which as an accountant is very young, right? You don't usually start your own firm in your late 20s, or at least you didn't back then. So I think it was, even though as accountants we're quite opposed to risk, for me it was as calculated of a risk that I could do. So I kind of built up some clients and one day was like, look, I'm going to have to leave my full-time salary. I know I'm going to take a pay drop, but I've calculated a little bit of risk and I know that I've got a small amount of clients that I can just, I was still living at home, didn't have a mortgage, so I knew I could get by. And I hoped, and obviously with expertise, that I would then have the time to fill in and build the client base. So there was definitely risk there, but I tried to make it as calculated as I could. In terms of how long I kind of pondered of it, my girlfriend at the time kind of pushed me into it to some extent. So I'll give her some credit. Accountants are naturally quite generalization, but you can probably agree, black and white, introverted, not much personality, but that doesn't say they're not nice people. So I always, when we'd go to functions and stuff, my wife would be like, oh yeah, Julian's an accountant. And I'd be like, oh look, I'm not that type of accountant. I always put that disclaimer in there. So she was kind of like, look, you've got a personality, like you don't need to be in one of these big firms where you essentially don't showcase your personality. You're just a cog in a wheel, you're behind a screen all day. And I obviously agreed with that. I loved going out to clients and having chats, becoming mates and stuff. So that helped push me to be like, as well as seeing a lot of stuff at the big firms where I was like, that's not great, in terms of like, there's a lot of hierarchy at the big firms, as you can imagine. There's a lot of power and weight being thrown around. One of my very first jobs, one of the bosses, I went into his room and I called him his nickname because I felt pretty matey with him. And he like laid it down on me and he was like, do not ever call me that. And I was like, shit. Do you know what I mean? So stuff like that, I'm like, I can't imagine one of my staff coming to me, even if they called me something random, like pulling them up and just crushing them.
I'd love that if my staff members called me that. Yeah. Hilarious.
So it kind of was like that. And then that fed into how they run their businesses. The meetings are very, very strict. The clients come in and you're the experts, you charge them lots of money and they're very confused sometimes when they leave because you're throwing all this big jargon at them. And that's how you justify your fees sometimes. Whereas I was of the approach of, I don't need to wear a suit and tie. My clients don't care as long as I'm giving them good advice. So I wanted to kind of build the business around how I wanted to do things, take the good things from, the firms and the experiences that I got, but leave behind that kind of backwards approach.
Yeah. Like the approachable accounting.
Yeah. Which is the whole comfortable conversations thing. So all these influencers, of creators, small business owners, they wouldn't be coming to us if we were these, super strict, highly corporate guys, because they'd just feel so intimidated to talk about it. People still come to us and they're like, oh, I've got a side business. Oh, I don't earn that much. They feel embarrassed to say they only earn X, right? Because they know that people are out there earning millions. And we're like, hey, don't care, right? They go, oh, I've got 3 years of taxes outstanding. I'm so ashamed. I'm like, dude, I had a guy last year and done one for 7 years. Like, so there's that approach that kind of like, it's fun for us, but it's inviting for that demographic.
What happens when you don't do your tax for 7 years? I mean,
yeah, look, sometimes I still get shocked myself, because like they'll come to us as a new client and be like, I've got this outstanding. I'm like, how'd it get to that?
Did you get
like, do you like not remember every year? Does the HO not? It could be anything, like their address has changed, they're not getting the mail. Obviously, there's something on them to be like, not put their hand up and say, I need to do this. But obviously the HO can charge you like a late fee per year. If you owe them money, they can charge interest for all the time that you haven't paid them. They can make your tax returns due more regularly instead of having like an extension on the due date. So having an extension is kind of like a good behavior thing. So when you lodge through an accountant, you don't have to lodge by the standard due date. You get to lodge it the following year. But if you've been late the year before, or obviously 7 years before, they won't give you that. So there's definitely repercussions to something.
How much trouble can you get into doing, like, for example, like what is the worst
I've never had anyone, like, if we're talking like, prosecution and stuff like that. Like, I've never had anyone do that. I've had, like I said, the clients that have had 5, 6, 7 years, and it's literally been the late fines and the interest. And that's just relevant to how much they owe. If they owe 10 grand for the last 5 years, it's interest. If they owed 100 grand, well, then it's more interest.
Yeah. Look, and that can balloon up quite quickly, though, can't it?
Yeah. And look, the ATO sometimes gives you some discretion. You might literally have had something go wrong in your life, maybe had illness. There are things there. It obviously gets hard when you're just kind of like, I don't know.
Yeah, of course.
It just happened.
But no one's gone to jail.
None of my clients, no.
What do you need to do to go to jail?
I actually don't know. It's probably a good thing.
Because I've never actually met, I know you said in the movies a lot, you're like, oh, they went for tax fraud or something like that.
Yeah.
What even is that? I don't even know what that is.
I mean, tax fraud and stuff could be anything. Like naturally my mind just goes like Ozark. It's like, it's money laundering.
Literally, yeah.
Which is why I love those kind of shows when I watch them. I'm like, I actually understand from an accounting perspective what they're doing.
Wow.
I Google this a lot because, like, as a business owner, every time I do something, I'm like, oh my God, what is the worst case scenario? But I think, based on what I've searched, it's only when you start to do fraudulent stuff.
Yeah.
Like you don't go to jail for forgetting something. Or
you don't go for jail for overclaiming or not having receipts, even if it's quite excessive. That's not going to be your jail stuff. It's always like, back pay, interest, penalties, like they'll hit you with all that kind of stuff.
Yep.
And audit, they might go back and audit 3 years now because you stuffed up one. They're like, this guy's high risk, let's just get him for everything. So there's that kind of stuff, but it's still
What about cash payments, like for, a lot of, so I won't point out any businesses or whatever, but
they still exist, even though like we're moving to cashless.
How do they treat that stuff?
Well, at the end of the day, it's all taxable. There's no rules that say because you get paid in cash, you're not meant to declare it.
Yeah.
Obviously, you'd still have, once again, we can't name certain industries, but people getting paid in cash, and how do you disclose that? But that kind of hits you on the other side as well. So once again, if I put my mortgage broking hat on, if you're not disclosing that income, your income's less, and then you're not going to be able to borrow as much.
Yeah.
Obviously, maybe you don't want a loan, but once again, there's something for everything that you do.
Yeah. I want to go back on that Ozark thing because that's actually quite interesting. Can you explain to me that start to finish how you're like how you can look at that and be like, okay, that's how that works.
So imagine you see it sometimes. You see these really quiet business fronts, and there's like never anyone going in, and they're not all doing what Ozark does, but you're kind of like, what's going on? So imagine you set up a business, and then on the side you're earning $500,000 of illegal money, right? So what you then do is you bank that money through the business, and you essentially say it's business income, right? You're happy to pay the tax on it. Once you've paid the tax on it, you've pretty much brought that income into the system, right? It's legitimate money versus if you had 500 grand just cash, it's very hard to use that. So this way you can get it into your bank, pay the tax on it, and then it's deemed as clean money. I think Ozark's a lot more complicated than that. It's a bit more extreme.
Yeah.
But I feel like that's the general.
So just washing money. Do you think that happens a lot? Like, I don't remember.
I don't really know. I don't really know myself. It's an interesting question. I think it definitely exists.
Yeah.
I would be interested myself if I like sat down with the ATO. I'd be like, how do you actually do this?
Yeah.
Right. And one of the things they would obviously do is look at benchmarking. So benchmarking is looking at your industry, your size of the business, and what your income is. So you might raise red flags. And this also is that movie, The Accountant. Naturally, it's called.
Yes, it's a great movie.
And The Accountant too. Right. But anyway, so like they might look at this business and be like, it's a laundromat. They turn over $2 million. So obviously there's probably some data matching in there that they do as well as a whole bunch of other stuff. Yeah.
There you go. There's some advice for
I don't know what that was.
washing money.
Yeah.
Or take me back. So I'm curious, when you did enter the big firm,
Yes.
do you have any piece of advice for someone finishing university and kind of venturing into that type of scenario?
Yeah. So when I have those experiences, I suppose the negative ones, there was obviously more positive than negative. So I was super excited to go into a big firm. Like I was rapt to put on a suit and tie, get a train into the city, like go level 20, all that kind of stuff. So it does have that kind of feel to it. I think all you need to do is be prepared to some extent to be a cog in a wheel, not in a bad way, but you got to remember in a small firm, there's 10, 20 people. So you'll get noticed and you'll indirectly get a good exposure of the work that you're doing day to day. Whereas in those big firms, there might be a team of 25 people, you're one of 25, and then you all do exactly the same thing. So you might just do, say my first job as a graduate, all I did for the first year was personal tax returns. I didn't see anything else, right? And I was fine with that because I was a graduate. Whereas at my firm, some of the graduates, they'll be doing bookkeeping, they'll be doing tax, they'll be doing GST, they'll start to get exposure to companies. So it's just kind of understanding that, the range of work that you might get in the short term might not be vast. But those big firms have obviously really good systems in place. So there's a lot to learn around how they operate, right? Their structure, who does what, and also just like training, right? Obviously, like they invest heavily in training. They might have monthly trainings, group trainings, external, all of that. So a great opportunity nonetheless. Some of the negative stuff, it's kind of like, I don't know if it's changed as well, by the way. This is all like when I was, not that I'm that old. I remember going in once on like a Sunday night doing work because there was that pressure of we need to deliver this. Our fees are so high, the client's so important. This is the time frame. I'm sorry I gave it to you on Friday afternoon, but it needs to be done by Monday. Right. So I'm sure that still exists in small firms, deadlines and timelines, but I think sometimes it's just exaggerated at a bigger firm to some extent.
I got a question that I would ask when I was like 21 that I asked my parents.
Yes.
So if you got like somebody graduating now from accounting or whatever, or any professional really, but let's say accounting, and they have the option to go to a big firm like you did.
Yep.
Or work for a relatively smaller and more dynamic firm, let's say yourself.
Yep.
What just objectively from your perspective?
Yeah.
Would you tell them to go
Come
work
to my
on a
firm,
big
it's the
firm?
best.
Well, not your firm, or a smaller firm. What would you? Which one would you reckon that they'd get the most learning out of?
I can't give you like the it depends answer.
Like your personal, because this is not right or wrong, but your personal opinion.
Yeah. I feel like from a learning perspective, maybe technical. Oh, not even actually. I reckon I'm biased now, so I'll probably say small firm, but not too small. That's probably the disclaimer, right? So I say that because, and maybe we also look at it from like a timeline perspective. So if you're only there for like a year, 2 years, 100% the small firm, because the exposure that we get in that 2 years is quite dynamic and vast. Whereas at the bigger firm, in the first year or two, you might be doing similar repetitive work. But obviously, if you're going to be there for 5, 10 years, then you'll obviously get a broad range of skills and expertise that someone at a smaller firm might not get. Because the bigger firms do invest probably more in education than the smaller firms. Right. So I remember I started as a graduate at a small firm that had 50 staff. It wasn't that small. But then when I went across to the larger firm that had, 600, 700, there were guys there that were the same level of experience in terms of years with me. But I looked at them and I'm like, wow, they're actually a lot more advanced because they had been working on harder, bigger clients, 5 years in. But maybe 1 to 2 years in, I might have seemed more ahead myself. So, you know what I mean? It depends a little bit on your long-term goals. Obviously, it's nice to try both, but yeah, good question.
Yeah, I second that because I remember graduating because I did marketing in uni and I was torn between like a small company and a big, like a Fortune 500 company.
Yep.
And I went into the big one. This was my first professional job for a couple of years.
Yeah.
And like I tell you this, in my business, we've got 30 or 40 staff members. My managers at maybe 25 years old would learn so much more than I did.
Yeah.
In the big firm, as in like how much they were doing, their responsibilities from like bloody paying invoices to HR laws to then fixing equipment. Like it's just so dynamic.
Yep.
But in the big ones that I went in, it's full professionalism. It's like systems and processes. Yeah. You wear this, everything was really rigid. You definitely learn like that depth of like what's accepted and what's not. But I didn't feel like I had like width of the stuff that I was doing. So
because there's something for everything in those big firms. So we had like, you do tax only, you do tax planning, you do international tax. Like everyone had their role. Yeah. And if you had something that crossed into that, you'd literally go deliver them the file and be like, do this.
Yeah.
Whereas now as a small firm, you get this and it develops into this. You keep working on it. Like it's yours.
I feel like it's agile in a small firm. You got to learn so much. I remember when I ran out of paper, I had to go to the office manager to just get more paper. It's not that hard, right? So I would actually I wish I went to this smaller firm. I remember it was like an office this size and they were like selling underwear.
Yeah.
And it was like so unprofessional. I was like, bloody underwear everywhere. But they had like maybe 30 people in the office. I was thinking, man, if I went into this one, it would be so chaotic. But I reckon I would have learned different dynamic skills.
Yeah.
But yeah, you're right, it's different. But then if you're staying with that big company for like 10 years, you get exposed to like clients that do billions of dollars,
That's right. And then it comes down to the individual, like what they want. So I remember when I was working at those big firms, although it was cool at the time, a lot of the clients were kind of like, it was unrelatable. We had these clients that were business owners that were turning over hundreds of millions of dollars. They were, your 50, 60, 70-year-old property investors. And I'm like, this is great. This makes sense. But you can't really sit down and have a chat to them. Whereas if I sit down and talk to these creatives, these freelancers, it's just more relatable and your advice is more relevant. It's not an age thing. It's just kind of like where they're at. And those bigger firms attract those bigger clients purely just based on they need the volume.
Damn. That's crazy. It sounds like it's good scenario to try both out as well.
Well, if I look at how I got to where I am now, I did kind of trial both out and then made the step.
And then you get the best of both worlds.
Yeah.
Take the good things from both. Yeah.
100%.
It feels like you kind of now, your business now is a culmination of both of those things.
Yeah. Like we're still, we're still professional, we're still got the systems, we still do all that stuff, but we just do it with a relaxed approach. Yeah.
Oh yeah. Is there anything on the top of your head that you would want to change about your industry?
I think it's kind of what we do. So in terms of the judgment and even just the education. So there's still a lot of that, a lot of clients out there that don't get educated. And the younger demographic, like I said at the start, is they really don't understand anything. So there's still so many accountants and advisors that literally just do stuff, give it to you and say, pay, sign, do what you got to do. So it's kind of continuing to actually invest in education. It sounds obvious, but people aren't out there doing it. That's kind of our biggest one. Yeah.
How do you solve that?
Well, I can't really change what other people are doing in terms of other businesses. So we try and do our part and naturally educate people. Yeah. In terms of how everyone else does it, it's just kind of like, just do it. It's a bit of a time thing because obviously you need to invest more time to educate your clients, and obviously some businesses might not have the time or they want to use their time elsewhere. So I think it's always going to be something that you're juggling, but I think it'll become ever more important as, like I said, more people have got side hustles, more people are self-employed, and that's going to continue to progress, I would say, with the amount of technology we've got and how easy it is to start a business. So there's going to be a demand for it either way. Yeah. So
just be prepared for that, I suppose.
Yeah.
And
position yourself if that's where you want to go.
Yeah.
To do it.
Yeah, it'd be a very interesting next 10 years, I reckon, for the tax. Yeah. The whole tax scenario.
Yeah, 100%.
Yeah.
So even the last 5 years for us, like I said, influencer, OnlyFans, that didn't even exist, like I said, 5+ years ago
Yep.
in the capacity that it does today.
Mm.
And everything's just progressing now. Like TikTok didn't exist,
Yep.
right? So it's only going to continue to evolve, which is fun. Like I said, from our perspective, we get to see this all firsthand. So I'll have people come to me sometimes and they're like, I'm doing this. And I'm like, shit, I heard about that. I didn't even know it was a thing yet. So it keeps me in the loop because there's hundreds of people coming at me with all the different things they're doing day to day.
Mm.
So especially Wayne, when he emails me at 11 p.m. with some wacky idea.
Yeah.
So it keeps me on my toes.
Yeah.
Not that I've built up a bit of like a immunity to things, but like when someone says they do something, I'll appreciate how cool of a job it is.
Right,
You know what I
yeah.
mean? Like, but nothing shocks me to the same extent.
Well, that's
I'm
good.
sure
That's good.
I'm sure you see like people that made a lot of money during a few years ago through crypto, right? You would have seen
For sure. Yeah.
Yeah.
like NFTs, that sort of stuff.
Yeah.
Yeah.
But it's like, because everything's so fast paced and always developing, that quickly gets replaced with, oh, you got paid 100 grand for doing a TikTok.
Yeah,
And then like, you know what I mean? It's ever moving. So I think in the moment we're like, this is crazy. This is like, how does this exist? But then something else happens and then you're constantly moving.
Yeah. It's good then because you have a wide understanding. Because
Correct.
when I did start to find accountants, I would be, so I have YouTube.
Yeah.
And they're like, what the hell is YouTube? And I'm like, well,
I know.
this conversation is now done. Like, you don't even know what YouTube is. So for heaps of people to have the comfortability to come up to you and just be able to discuss what they're doing and how they're earning their money.
Yeah.
That's phenomenal. That's amazing. That's what you want.
And even outside of like the creator space, like just like e-commerce businesses. So just to see like what people are selling in terms of like physical products, right? You get to see firsthand they're starting a business, they're selling this, and you're like, will it succeed? How's it going? Like, you really become invested in all these different businesses. I'm really pitching becoming an accountant, aren't I? You're in? I reckon Wayne could be an accountant.
It's pretty interesting. I mean,
Well, he's got his red box. The red box philosophy.
Personal joke.
Personal joke.
Final question
Yeah.
to finish.
Go.
Everybody watching this, I'm guessing, not everyone, but most people probably younger, 20s, maybe early 20s. If they're probably going to come out of uni or school to find a job or do something.
Yeah.
You're an employer. So this is more so also I wanted the answer to your question. As an employer, you got a lot of like younger people working for you.
Yep.
What's on top of your head, like 3 traits that's not professional, like not accounting related? You have to be good at maths, but I don't mean that. But like traits, personality traits that you see that you value in a lot of these younger people. What would they be? Give me like something on top of your head.
Yeah. Rapid fire. Ends with rapid fire. Maybe the willingness to learn. Sounds obvious, but actually show that, right? So someone might just come to you and they just want to get a job as a graduate because they need a job. But, asking questions actually shows that you want to learn. And then when you're in the role, proactively taking steps to learn and progress in your role. I feel like sometimes with generalization, but some of the younger demographic, we want the roles, we want our income to grow, we want the flexibility, we want all the things, but you need to be consistently learning to show the team that you're in it. Is number 1. Number 2, long term, right? Obviously, as an employer, you want long term employees, but that is two-sided. You have to give your employees what you want, but it's having that long term vision. Right. So whether that's, coming to your boss and saying, I've thought about this idea, it might be small, it might be great, it might not be great, but showing that you're in the business long term and wanting to, help grow things. So then that kind of turns you, away from just being an employee, but being like a business partner. And then you never know what that will progress to. Is it like 10 years down the track, you become a part owner? But having that mindset from the start is huge, and as an employer, I would love to see that. And lastly, maybe just like showing your character. I know often we get caught up in kind of like being professional, great enter scores, whatever they're calling them now. That's my age.
ATAR.
Yeah, ATAR scores, right?
Yeah,
So
ATAR.
it's having your personality, because at the end of the day, that's why I started my business. That's what I showcase. So if someone can showcase that to me outside of the technical skills, at least I know, they'll be good in front of customers, clients. They'll be good to chat to and be around for 8 hours a day. So maybe there's some heavy hitters.
Perfect. Love this.
Amazing. For anyone who needs some more advice or maybe even potentially some accounting help,
For sure.
where can they find you?
Yep. So we do complimentary chats. You can book in through our Instagram at mauro.au. We're on TikTok. We're on all the spots. So yeah, book in a call. Happy to chat. So tax, mortgage broking, business structuring, all the things.
Thank you, Julian. Appreciate you coming on.
Appreciate it, gents.